What's going on, y'all? We are live. Okay, we're using a different platform this morning, so bear with me if there's any issues. But today, what we want to do is actually give you an intro into stocks, options, Forex, futures, crypto, all of that good jazz. Okay, so if you're here, you probably already have access to our community where you probably got this notification, okay? Or maybe you're part of our text list where I sent you a direct text and invited you to this class, okay? So if you're not in our community, make sure you join. This is totally free. We also have these announcement channels where we do these live streams all the time. There's free sauce. We have a weekly schedule in here as well. Plus, if you want to get into the premium channels, there's mindset classes. Actually, there's a mindset class going on right now. Plus, we post morning daily updates with news, economic calendars. And if you're part of Trade Heroes, which is our text alert system, you get these breakdowns, you get these text alerts, plus you have your own private Discord channel where you can come in here and access the trades and analysis and everything, right? So today, what I want to do is actually give people an introduction into the stock market. Now, if you don't have cheat code or you want to get access, you can always go to shop.cheatcode.com and you can sign up for free, or you can access our courses or our live community trade alerts. Plus, we have flashcards and games, y'all. We're trying to take this to a whole nother level in terms of education and being a resource for you all, right? So we want to continuously put out tools for you all. So without any further ado, we're going to hop right into this. I want to make sure I don't have any questions. Now, I'm going to have a live Q&A at the end where you all can ask questions if you need to, okay? So hit that like button. I appreciate y'all showing up, coming to be here on this Saturday morning. You could have been anywhere else in the world, but you are here streaming with Cheat Code TV, and we appreciate that. So let's get straight to this knowledge. All right, hit that like button for me so we can keep doing this, and let's get at it. Y'all ready? Who's ready? Drop some flames in the comments. Let's get it. And make sure you share this link with a friend. Let's all get this knowledge, okay? So I'm going to get it started. Want to make sure you all can still see me. Drop some ones in the chat. If you can still hear me, you can still see what I'm seeing on the screen. I just want to make sure that you all can see what I see. It should be a slideshow right now that we're about to start. Just drop some ones if that's the case. Two, if you cannot see this, nor can you hear me. Okay. Now I'm going to check the chat to make sure we're good. We got ones. Okay. We back active. Let's go. I'm going on without you twos. All right. Cheat Code Trading Academy. All right. The ultimate guide to trading and investing. Today, we're going to cover really what you need to be a successful trader and investor across stocks, futures, Forex, and crypto markets. Okay. So what you can expect for today is I'm going to give you all just an overview of the market. Don't expect too much crazy in-depth because this could go on for hours and hours. I could talk for days, but I just want to give you a brief overview so we can kind of cut out the fear and build the confidence in you all's trading and investing. Okay. So we're going to cover fundamental and technical analysis, also risk management. We do this to make money, not lose it. So I want to show you how to protect your money. Also some strategies and some psychology that'll help you become a more efficient and patient trader. Okay. And then we're going to go over some platforms, tools, and resources that you all can use to continue on your journey, just a toolbox. And then at the end, we're going to save the end for your questions. So if you got any questions, jot them down to the side because I'm not looking for them right now. But when we come to the end, drop them in the chat, drop them in the comments. If you're watching this video on a future date, we got answers. Okay. Let's get at it. Okay. This is going to be an introduction to financial markets. What I want you all to get from today is understanding which market works best for you. Okay, because I know y'all got a lot of friends trading stocks, options, crypto, Forex, and futures. Okay, and they're making some money or they're losing it. Okay, but I want to make sure you all find what works best for you. All right, so let's get at it. Up first, one of my favorites. I'm personally involved in this: stocks and options. Okay, this is probably one of one stock market is probably one of the largest global markets. When you talk about something that can move the economy and the world, the most equity and funds is in the stock market. Okay. So I gave this statistic right here, which I thought was really interesting because I wanted to pair what you see on the screen with the information that we're about to read together. Okay. According to a study by the Credit Suisse Global Investment Returns Yearbook, the average annual real return adjusted with inflation, okay, so for stocks from 1900 to 2020, okay, was 5.6%. compared to 2.8% for bonds. Okay, now why did I put in bonds? Because right now you're hearing that the 1-year bond just hit 5%, and the 10-year bond is just hitting numbers that we saw in November, and all these bonds and interest rates and treasury yields are hitting highs, right? Or not the interest rates are increasing, but the bond yields and treasury yields, they're going up and hitting highs. Now, what I want you to see here on my right, we've got cheat code algo, and I've got the SPY, which is an ETF for the S&P 500. I've got a 6-month chart on here. So each one of these candles represents 6 months. Okay. So you can see here from 2010 up until now, we've been on a complete bullish run up until 2021, where we saw this rut, came down, tried to bounce back off of this TP4 level on the cheat code algo. Okay, so what we're looking at over time has just it's been on a massive run due to quantitative easing stepped in at about right here, right, to save us. So what we're looking at is why bonds are becoming more attractive, right? If you have billions of dollars, right, you want to look at this in a risk reward ratio and say, okay, am I willing to risk my billions and millions at the top of the stock market trend over a bull market over 10 years, 10 plus years? This thing has been in a bull market, right? Like, even though there was a bear market in 2022, we still haven't really seen a retest of any of this type of stuff, except here, which was maybe in 2020, we saw a jump and bounce back, right? So you want to pay attention to these things, because billionaires, institutional investors, reason why bonds are becoming more attractive is because they can get a yield on a 1-year guaranteed cash back from the government better than the average yield from the stock market or return from the stock market. So that's why bonds, paying attention to bonds, is important if you're trading stocks and options, okay? Because it is a bonds versus stocks when it comes to capital. When stocks are overvalued and bonds yields are increasing, bonds become more attractive because they're a lower risk asset versus high risk assets like stocks and equities. Okay, so you can trade stocks and options when it comes to that, and there are long-term investment opportunities out of this when it comes to stocks and options. Now, options, you're doing covered calls, strategies like that where you're actually hedging, and you can actually create income-based strategies using options, which a lot of people don't do, but you should definitely start learning about. And we've got courses on that breaks down these type of advanced strategies, but I don't want to cover them today. Like I said, this is basic. I want to keep it really simple. I want to introduce people to the market today. Okay. So with that being said, it's a low cost of entry. Okay. When it comes to options, I've seen people turn a little into a lot. Okay. And that doesn't mean take a gambling sense when it comes to it, but that means that I've seen people take $30 and turn it into 300 with the right type of strategy, right? And consistently. And that's through options. Now, when you talk about investing, you can do that on a low cost basis using fractional shares. Okay. So that means that you're purchasing just a portion of an actual individual share. So you don't have to pay, say, if you're looking to invest in the S&P 500 ETF, right? You're saying that, well, I can't afford 368 to buy a whole share, right? But I have $30 to put towards a portion of that. Right. So now you'll own 10% of that share, or, a little under 10% of that share, but they're going to give you a portion of that, and you'll own a percentage of the share of this ETF. Right. And so on the basis of ETFs, I want you all to make sure that the best assets for beginners, if you're 1 to 2 years deep into the market, you should, especially if you're losing, you should be focusing on index funds. Right. And when I say index funds, I'm talking about funds that track indexes, okay? So the NASDAQ, the S&P 500, the Dow, the Russell, all of these are indexes. They also have funds that follow them. Not only do they have like mutual funds, which the difference between mutual funds and ETFs, that's going to be a whole nother video that I'll break down, because there is a difference when it comes to just purchasing, say, like Vanguard index funds through Vanguard, than versus coming to an open market and getting an exchange traded fund, right? So an ETF just essentially means that you can buy it on the open market. It's like the exchange. Now, index funds, if you're talking about mutual funds and stuff like that, those aren't like you don't you wouldn't buy it at 12 o'clock noon or something like that, because it doesn't work like that. If you push buy at 12 o'clock noon, it buys at the close of the day. When the market closes, that's when your order triggers for your index funds or mutual funds. So I'll go over that difference in a lot more detail. But what is the oldest stock exchange in the world that is still in operation today? Drop it in the chat. I want to see what answers you all have. Let's see what we got in the chat. What do you think the oldest exchange? Can't see your chart. I don't have a chart, but I do have the presentation up right now. What's the oldest exchange? Drop it in the chat. We got Chicago, New York. Okay, y'all cool. But you know what the answer is? It's freaking Amsterdam. Their exchange has been around since 1602 for 400 years, y'all. I'm going to actually post some content on it because I've been there. And that was surprising to me because that was something that I didn't know. But what I want you all to get from that is that I don't care where you are in the world, there's a market available for you, right? I mean, I've been to Amsterdam, saw the market myself, and then going to Switzerland and seeing Credit Suisse, right? I was like, oh my God, that's it. So getting involved in the market is for everybody, and it's available everywhere. And, it's been around for years. And, as you can see, over time, it just goes up, right? The goal for you is to make sure that you're getting in at opportune times. Okay. So next market, foreign exchange, the Forex markets. Okay. Forex is one of the largest markets in the world when it comes to daily trading volume, right? And that's 5 trillion of daily transaction volume compared to 200 billion in the stock market. So when you talk about volatility, this is extreme. You're talking about some crazy price movements in here, right? To the right, I have cheat code algo, but these are daily charts. I can't even imagine what is going on an hourly or a 5-minute or something on these currencies, because you can see they move in quite a range just within a day. Right. And then we'll come back to that range and go sideways and stuff. Right. So the volatility in Forex markets is extremely high, which means that there's high liquidity. And when I say high liquidity, you're always wanting to look for volumes if you're a trader or investor, right? If you go look at a stock, an option, or a Forex, if there's no volume, that means that there's really low liquidity. Means that if you try to sell to somebody, there's going to be low volume and low liquidity, and you may have to be patient for your order to execute. Right. But in high liquidity markets like Forex, they can buy, sell just like that. And that's how you see these people making a lot of money or potentially losing it. Right. I don't trade Forex, but I think I could be really good. What I've pictured here is to show you how the national currencies are exchanged. OK, because as the dollar goes down, right, it's weighted against other currencies like the pound. The pound, it starts GBP and then USD. So currency pairs are going to come in two. So there could be a USD, GBP, right? But right now we're using the inverse, which is GBP USD compared to the dollar index, right? So what I want you all to pay attention to, especially if you trade Forex, this can help you when trading pairs. When the dollar comes down, you can see that pairs that end with USD actually go up, okay? And when the dollar gets a caution candle, buy signal, right? You can see that this has a sell signal, got a caution candle here. You can see the inverse is happening here, okay? And so as this finds support at our stop loss with a buy signal and a indicator, caution candles all on our stop loss, you could then go back to the dollar and say, hey, I'm seeing some resistance here. And why? Because if I were to move this to the left, you'll see that there's a level here at 105 that it just can't seem to get over. Okay, so that's why I say having tools like the cheat code, but also understanding these relationships in the market can really help you in the future. But another cheat code is how it affects the currencies around the world. Now you saw how the dollar index affects currencies that are paired against the dollar, right? Now use this to your advantage when you travel. I can live anywhere in the world based on the value of my dollar, right? When I know that the value of the dollar is strengthening, I have more strength in my dollar. That means that I can get more currency in exchange, right? So when you see those currency exchange, because there's plenty of ways you can trade current Forex. And when you go to an ATM, that's foreign exchange, right? Especially if you're in another country, you're going in, putting in your card. Your card is based on USD banks, right? And then they have to exchange that. That's why if you're in a foreign currency, it asks you, would you like this exchange rate? I usually decline, but do whatever you want to do. But that's how currency exchange affects how you move in the day-to-day basis as well. So as the dollar goes up, you have better opportunities to travel or buy luxury items in foreign countries, or so this can help you as a business owner and a traveler. So that's the cheat code to using foreign currency to your advantage. Okay, so cryptocurrency. All right. Now this has got a lot of hype. Literally, what's crazy about it, or let me just, it's a digital currency. Okay. It's on what they call a blockchain, which is a secure ledger on a peer-to-peer network that's built on Web3. Okay. So Web3, blockchain, crypto, all of that is a whole nother masterclass that we actually have available in a course. And then future, we'll be definitely doing some more live streams and classes on more cryptocurrency as well. So, but what I want you all to understand in this note that we have here is that the total market capitalization of all cryptocurrencies reached an all-time high of over 2.5 trillion in May of 2021. Okay, so when we have the cheat code here, this is Bitcoin. I like to think of Bitcoin as like the index of cryptocurrencies, right? So we have the market, the stock market has the S&P 500, the NASDAQ, the Dow, right? I see Bitcoin as being the index for cryptocurrency, right? I feel like your cryptocurrency can't get its support without crypto or Bitcoin being bullish or bearish or whatever it needs to be in your favor, whether you're short or long. Okay. But interesting fact here is that at the high of 2.5 trillion in May of 2021, you can see here that we had a caution candle up there. So it didn't, and this is a weekly chart. I always tell people to use larger time frames. That way you can see major swings in the trend, right? So you're not right here being like, oh, I can be bullish, right? No, I think there's really no support here, so it's going to break down, right? And it tried to use this level here, and you want to see these swings, right? Where can I get support? And where is resistance? Okay, so you want to pay attention to these things, and don't ever chase price. Bitcoin is a perfect example of don't ever chase price. You all were chasing Bitcoin up here, and literally we're back right here, right? Y'all did all that hype chasing, telling other folks to buy, and then boom, it came down. Y'all like, this is the dip, buy it. I swear it's never going to be back here again. Like, you're going to think about it and it's never going to come back. You need to buy now. I swear you're going to miss out. Don't be that person. And then bop. You at a loss too, because everybody you told about the dip, they broke now too. So I'm not saying this isn't going to work. I'm just saying be patient, because price always come back. So like, especially if you take off like this, you got to reclaim this stuff. You got to retest this. You can't just take off and not actually show me that you deserve where you just went, right? Then show me that there's demand here, right? But that's another stuff. I could go on. I'm sorry, y'all. Sometimes I get into it, but you can see here that around that time when we were at an all-time high, cheat code gave you all the signals to let you know, hey, warning, we had a diversion here on the squeeze. We also gave you the signal here that the swing was too high. Also signal on the squeeze and the swing here literally was just like, hey, bro, I know it's at a high, but don't follow the FOMO, okay? And then as you can see here, it got a little more bullish sentiment, a lot more bullish triggers. So you can see how it caught this trend here and gave you this wave. That does not mean we're going to hit these targets. It just means that there's an opportunity, but you do want to pay attention to all these levels here, because they serve as support or resistance. Now, with that being said, trading cryptocurrency is extremely volatile. Okay, you can see it can drop from here, and in a matter of days or weeks, it can go down 60, 40, 100% in some cases, in some type of they call them poop coins, right? We don't want to say the real word, but the cool thing about cryptocurrency is it's open 24/7. So when the stock market closes Monday through Friday, and all your folks are just sitting around from that be trading options and stuff, and they chilling, you can still get the bag if you want to, because crypto is 24/7. Okay, it's open on the weekends if you want to trade it. You just have to have the stomach and emotions for high volatility markets. But what we do see in the future that's positive about it is there could be some increased adaptation, as well as mainstream recognition is coming as well. So pay attention to cryptocurrency. But got a question. What do you think is the second ranked cryptocurrency? Right? Drop it in the chat. Drop it in the chat. We got some cryptocurrencies right here for an example, just to show you a few things. So you got your Litecoins, your Bitcoins, your Ethereums. But what is the second ranked? Okay. We all know that Bitcoin is number one, but what is number two? Drop it in the chat. Let me know what you think. I hope y'all are right. The answer is Ethereum, right? Now, why is that? Right? Because honestly, I've been all over the world, and the two things that I consistently see is Bitcoin and Ethereum. Bitcoin being the case that everybody wants accepted, everybody wants to have it available in terms of transferring money or making it easier and faster in order to share capital, right? And then when it comes to Ethereum, there was a time when I saw this and cheat code, and we came back up here and cheat code was throwing out these signals, and I saw it was getting kind of hot, and I wanted to trade options in cryptocurrency. And when I went to go do that, it was asking me that I needed to purchase Ethereum in order to like transfer or exchange Ethereum for the tokens that I needed. And I was like, nope, done here. So that's just my personal opinion. Stocks and options work for me. I'm not trying to break if it ain't broke, don't fix it. Right. So I don't trade cryptocurrencies. I don't even invest. But that's not to say that you shouldn't, or there's not any opportunity there. I would if I had the time. It is extremely volatile. So this isn't something that if you don't like risk, this ain't for you. Okay. Now, futures and commodities. Now, this market is really cool because you do have that high volatility, just like Forex. But the cool thing is that these assets actually can be applied to the global markets, right? It's cool because, the war on Russia affected oil prices because of either the restrictions that we had, the tariffs that we had on other goods and things can affect the prices of coffee, corn, wheat. All these things can be traded in futures. So if you're sort of an economic person or you find interest in coffee or corn or wheat or gold, right? Because these are all assets that you can either trade physically, right? Or you can trade on this open market right here just by clicking buy or sell, right? So the cool thing about this is that finding those relationships, right? Because what's cool about commodities is a lot of these have seasonal patterns that you can track. And you can come in and find these swings in the price as well as the seasonality of those particular things, right? Because if you follow gold usually goes up with the market, right? Now, this isn't always, but it usually is supported by, because if the dollar goes up, then gold goes down, right? And as the dollar goes down, gold goes up, and so can the market, right? So you want to pay attention to this because you can see here that we've got a lot of resistance at this stop loss level. So using cheat code algo can at least, like, even if you're buying gold, I went to Dubai, I went to it was in they had like gold brick ATMs in UAE, right? So, you can literally do it at an ATM, a gold brick ATM, or you can go to stores. Your jewelry stores are buying and selling gold. These are all things that you, like I said, you can trade in the real world, or you can trade on the open markets, the global markets, right? So these also have extended market hours. So if you like trading, say on Sunday nights, futures are open for you. If Sunday nights are more available to you, that could be something you could trade and learn. Because like I said, there are more extended hours for trading time when it comes to futures. All right. So on to the next portion of this. Now that you know what markets that you're might be interested in or might work for you, or now that you at least have an overview of what goes on, when you get into that market, you're going to need to understand fundamentals and the technicals of that market. So I'm sure all have heard about fundamental analysis and technical analysis. Okay. So technical analysis is going to be trying to fuse indicators and trading patterns as well as price action in order to figure out where are the trends, right? Now, fundamental analysis is more of like pulling up the hood, right? You just got a car and it's looking real good, right? I mean, on the chart, it's looking sweet, right? Man, what a sweet ride, right? What a great price for this car too, okay? But then you got to look under the hood, and that's the fundamentals, right? That's going to give you the insight into the company, because once a company goes public, we get insight into this, right? If a company is private, They don't have any obligation to show us any of this information when it comes to price to earnings ratio, earnings per share, EPS, PE ratios, EBITDA, all of these things. You're going to hear everybody talk about a market cap. When it comes to market cap, essentially, that is just the number of shares available multiplied by the price of the stock, right? And that's going to get you your market cap. So these companies, essentially, when they come to the stock market, they're coming for value, right? Because they want more funds. They want people to invest in their company. And that's what IPOs are, initial public offerings, right? We're going from private to public. So when you talk about companies coming to the stock market, they are coming to you to say that we are done getting private money. We need your help to grow us further and get, make more money, right? And so when they come here, you want to look under the hood. You want to use fundamentals. Me personally, as a trader and investor, I stick to index funds. So I don't even, when it comes to investing, I don't personally invest in individual companies. So I'd never really look at fundamentals. I focus on index funds. They do all the work for me, ETFs and stuff like that. When in terms of long term, I don't have to pick a stock. They do it for me. They're going to get the best, right? And not all ETFs and index funds are created equal. Okay, you just can't go pick one. All right, and we'll go over that as well on another live. But I want you all to understand just the basics about fundamentals and technicals. Okay, fundamental analysis is what you want to buy. Okay, all right. Technical analysis tells you when you need to buy it. Okay. So when we're looking at this, we see that there's support here. Okay. And then as this trend rejected, but then came over here, we can expect some support here. If not, we heading back to support down here, right? So you want to pay attention to technical analysis because it tells you when it's the best time to make the decisions that you want to make. That's why I say it's important for you all to learn these things because it's just going to make you a lot more efficient and profitable. All right. So when it comes to strategies and the psychology for trading, I always tell people hope is not a strategy. Okay. I feel like a lot of people are used to what was happening in 2020 when the market was just going up. And, you could just literally, you'd have no skills, no knowledge, nothing, and it would just work. Right. That is not the case. Hope is no longer a strategy this year. Okay. So what I need you all to do is actually develop a trading plan and stick to it, right? Whether it's trading supports and resistances or trading implied volatility. It could be so many different factors and strategies. I mean, everybody's got their own things from penny stocks to options trading to income strategies, right? So there's so many different strategies, but make sure you pick one, you get good at it, make a plan and stick to it. Okay, because by doing that, you'll be able to manage your emotions. Because what's going to happen is if you create a plan and stick to it, you're not going to be mad about the outcome because you planned for it. Okay, so on top of that, when it comes to strategies, you want high probability setups. Okay, so you want to be patient for those, right? I feel like everybody's treating the market like it's a casino, and y'all think that y'all can just come in every day and you're going to make money. It doesn't work like that. Every day is not the day to trade your strategy. And that's why I want you all to pick a strategy and focus on it. Because if you're trading every day, that means that you haven't even picked a strategy. You just out here willy-nilly. You know what I mean? Like pick a strategy and stick to it. It's going to help manage your emotions. Okay. Now stay informed on market cycles, because what you all have to understand is that every 3 months we've got some earnings coming up, and that's essentially what's happening in the market, right? So March is going to create some opportunities. You got May and June is going to create some opportunities, as well as September's, right? So every time those little 3 months come around, those little areas are going to create some volatility because people are basically betting with or against the speculation of how they're going to do, right? You have those expectations of earnings, and did they beat them or did they miss them, right? And how that affects the earnings. Stocks can drop after good earnings, right? Because the expectation has been met. Thank you, goodbye, right? You don't know how long people are planning to invest, whether it's 5 years, 10 years, or 2 days, right? So pay attention to market cycles because it's going to help you when you can start seeing these cycles and you can start waiting patiently for these high probability setups. All right. So next thing that's going to help you create more strategies to get more confidence inside the psychology side of trading is actually learning chart patterns. Okay. This is so critical because this is something that I passed up. I didn't see the importance in doing it, so I didn't. Right. But I'm with the cheat code. I got the cheat code flashcards. And when I'm on the plane, I like to just kind of go through them and study. And what I was able to do, I was like, dang, okay. There were times when I'd be trading and I see the pattern and I'm like, oh, let me go pull my flashcards. Let me look at the flashcard. And then the flashcard would give me the information that I needed, whether it was bullish or bearish or whatever it was. And I could study that pattern and either trade it or watch it play out, right? I mean, I've had a strategy that I've become extremely successful with, but I had to paper trade it for 3 months before I put my real money on if it worked or not, right? So make sure you're understanding chart patterns and not just out here guessing, but you actually are knowledgeable about what's going on, okay? Because the only way you're going to be profitable is actually if you create a plan to manage your emotions, to be patient for high probability setups, okay? And that's going to be based on how the market cycles through this, because when you see those patterns, you're going to be a lot more efficient in trading and profitable, all right? And remember, this is not a get-rich-quick scheme. I'm trying to build a stairway to heaven, all right? Not a heart monitor of guessing when I can catch these volatility surges. I'm literally in there, up, and I'm taking profits if it's coming to a trade so I can take the next ladder up when the opportunity presents itself, okay? So the best way for you to become more patient and reduce the anxiety is actually creating a plan and sticking to it, all right? Remember, hope is not a strategy. Now, since I said we do this to make money and not lose it, one of the most important things you all need to be focusing on is risk management. I don't ever want you all to be comfortable with losing, okay? Losing is obviously part of it, and there's lessons in the losses, but I don't ever want you all to be comfortable with losing, like literally going into trades saying that it's okay, I have a stop loss, I'm not going to lose that much. But what I've realized from my own experience, y'all, I'm speaking from experience, what I had was a compound of losses. So over time, my account was actually going negative because I was getting stopped out of horrible trades and kept setting up horrible low probability setups and just kept getting stopped out. And my account was literally building a stairway down to hell. Like, I'm trying to go to heaven, okay? But what I want you all to realize is that the confidence comes from not I will profit on this trade, but the confidence is I will be fine if I don't profit from this trade, right? Not saying that I'm okay with losing, right? No, I'm okay with not making money, but I don't want to lose every time, okay? And in order for you to do that, you can use different order types, right? A lot of you all I feel like your anxiety is just sending you in the market and you're just pressing market order, all right? And you're literally just coming here and just taking whatever the market can get you when it has the ability to pull back, right? But why not wait on it to pull back to these areas and set limit orders so that you can buy them at higher or lower prices, right? Now, if I'm selling, this is a limit order, I would set the price higher, right? So you could say, and that would also be something like a take profit. So the basis of what I want you all to get out of this one is that instead of number one, all right, I've got it right here. Never take a trade that needs a stop loss, period. Okay. In order for you to get better with your risk management, you need to stop taking trades where you're afraid to lose money. Okay. Because if you have mentally gotten into a trade, you open up the trade and you click buy and you are watching it, you're like, oh God, I hope it goes up. Hope is not a strategy. Okay. So if you get into a trade, I want you to know you need to get out of it. Right? Because that's not you're hoping that it will go up. You're not certain. You're not confident. Okay. So if your emotions are not behind that trade in a confident way, it's not the trade for you. Right. If I get in a trade, hell, if it goes lower, I want it at the lower price. I don't need to get stopped out of this. And like I said, I've been here, y'all. I've been stopped out. I've had compound losses over time. And that's when I realized, no, I just need to be patient, because a lot of times what I had charted, I entered too soon thinking I'm going to catch some reversal trying to time the market, and it just goes down to the level that I had. And I could have just been patient instead of getting stopped out so many times. And so using these limit orders, you can allow the price to come lower to you So you can use the chart and say, hey, because I mean, if we go back and look at the Bitcoin chart, right? You can see here that the price literally came all the way back down. Okay. So if you would have just said, well, I think there's a lot of demand around 30, right? You could have at least let a limit order. So when it popped back down here, it'll strike, right? Not saying that it's going to hold, but your stop loss would have been at 30, right? You enter at 30 or whatever this level is because you saw support here. You enter there, but your stop needs to be below these levels because you know that below here, I don't have any help, right? I don't have any help. So your stop loss at least protects you from still holding and being like, it's going to go back up. It's going to go back up. I swear it's going to go back up. It's going to go back up. And you could have saved yourself right up here, right? So be patient for the limit orders to set you in the trade so that you can either set a take profit up here and say that, well, there is a lot of volatility and the market is looking pretty nasty right now. I might want to set a stop loss up here to take some profits, right? And then go ahead and take the profit and let it ride down. You got no sweat right here, no emotions. You're not trying to figure out if you need to hold or whatever or what you need to do. And when it gets back to this level, pay attention to it because you know that right here, this is our last hope. Because on this day, boom, it was gone. Bye. Yeah, and you still sitting there holding like it's going to come back. So in order for you to use proper risk management, you need to be prepared by using limit orders. Let the price come to you. So set stop losses and profits to protect your gains using take profits. It's the same thing, just different name, right? You can trail it with a percentage or a certain dollar price that trails it. You can put stop limits. You can put even stop orders for sales, right? If you want to short something, you can do this with options as well because options are extremely volatile, right? And you can open up an options chart and say that, hey, I want to set a limit order to come to me, right? If we know that options are volatile and at the market price that you're looking at right now, you're willing to take a loss on it, well, screw it. Just set a lower limit order. Right? Don't try to over leverage yourself in a bad position that you're willing to get stopped out on. Why not just maybe take one contract, see what it does so that instead of maybe losing, $50 on one contract, right? Or instead of losing $50 per contract on 5 contracts as you thought it was the time, you only lose $50 on one contract and that's $50 versus a $250 loss. And then your emotions, you over leveraged yourself. And so the 250 is making you more emotional versus a $50 step back, right? Because now that premium is $50 lower. And me personally, I want it, right? But you about to get stopped out. And guess who's going to buy that price? Me, because I was patient, right? So I see so many times where the price literally comes down. Sometimes y'all, the limit order, it will snap, take it and never come back. Like it would literally take my limit order because that's all it's doing to you is stopping you out. You ever been in a great trade and then all of a sudden the market just slaps down and takes you out? That's all it's doing. It's coming for you, but it's benefiting me if you're patient. Okay. So one last thing here, now that you know about how to set orders at better prices and how to take profits when you're in a gain, right? And protect those gains, create alerts to wait for these opportunities, right? Instead of trying to buy Bitcoin at 30,000, set an alert for when it gets to 30,000. Let me check the charts. Let me check the indicators. What is the market saying? What is everything telling me? Is it more bullish? Is it bearish? Right? Because with cheat code algo, you can actually click cheat code algo, set alerts on buy, sell signals. You can see bullish, bearish, trend changes and confirmations. So all of these things allow you to be more patient. Okay. And like I said, it's the number one thing y'all need to stop doing is losing money, right? In order for you to be successful, you need to first learn how to stop losing money. And this is going to be key to your success. But we're going to break this down more in other lives with just showing you how we use these stop losses and limit orders and everything like that. Now, if you want more of this information, we got tons of resources in our community, from live streams, trade alerts, chat rooms for people trading all across the world. Okay, so if you want trade alerts, we got the Trade Hero text alerts. And we also have our live trading floors that we stream. So you can access these 24/7. Plus, we got support. Okay, so if you're in the community, then you already know what it is. But congratulations, y'all just got the basic breakdown of the stock market. Now let's apply all that knowledge that we just learned to actual charts. Okay. So I'm going back through the chat right now, make sure I didn't miss anything. Oh, I see y'all. Y'all were talking about the UK, the Dow Jones, the New York Exchange, but y'all found out it was Amsterdam, which has been around for the longest, the exchange. It's actually called the Euro Next now. Okay, let's see what else we got in the chat. Oh, yeah, a lot of y'all knew Ethereum was the second ranked cryptocurrency. Okay, can you tell me which broker in the US that could trade SPX on not the options? That's a great question because I'm not sure if you can actually like if it's an actual fund. You know, I could be wrong. Like the indexes are indexes. They're a gauge and you can trade them, but I could be wrong. Don't quote me on this, but I'm not actually certain you can buy the SPX, but it's not available on my brokerage, so I don't know. People in the chat can help out on this one because I'm not exactly sure. I just trade options on the XPX, and I also use the XPX for charting, as you can see here, trying to find areas of supply and demand. But I'm gonna break that down in just a second once I go through these questions. I like the explanation. You're tired of losing on options. Yeah, man, be patient. Let the price come to you. Set the limit orders. Go to the option graph. If you use Webull, you can use the option graph to come here. And also, I'll show y'all a little trick, man. Since we here, let's get it. I'm gonna show y'all this little setup. This is how I trade the market, right? You want to trade Tesla, you need to be watching Lucid as well. Now, the only reason why I was watching TQQ right here is because I had some money in it. But if I were to watch this, I'd probably watch the SPY or the SPX as well, right? Because Tesla is heavily weighted in the SPY, but Tesla has a lot of crazy fanatic investors that control the volatility of this thing. And I'm not saying that they control it to say that if they say it's bullish, it's going there. I'm just saying that a lot of times this doesn't have a direct correlation with everything that tracks it, but it can give you significant signs of what's incoming, right? Because this is my trade setup. Like to show you an ideal setup, I would do the dollar, put the SPX right here, and then I'd put the VIX maybe. Now I want to just come in here and check the VIX because with the VIX, I want to see like, is it low or is it high, right? Are we at resistance or support? The VIX, I'm really trying to figure out what's the barometer of the market, right? Because the lower this goes, the more bearish we are in the long term, right? Because the lower this goes, it's only a matter of time before it spikes up, right? So, and if you're wondering where my lines come from, they come from like daily and weekly charts. Like I'm looking at where did these wicks kind of like the candles stop and wicks kind of get a lot of friction here. Now, this is ultimate last case scenario type of situation. That's like the holy moly grail. It's gone too far. But once I know where the VIX is, it tells me the temperature of the market, right? Are we hot or are we cold? Now, I put the inverse to the S&P 500 so that if I'm on the hourly, I know that if I'm bullish on the market, but I'll actually show y'all this trade I did right here. I saw this. This is why trading patterns are crucial. I saw this ascending triangle right here, and it was just getting squeezed, and this thing broke out. And if we actually pull up Tesla, I was trading Tesla at the same time. So you can see here, we had that same pattern that it was happening here. And it just needed some time to catch up, but boy, it squeezed, right? So I was able to profit on Tesla and S&P 500. And why did I know this was coming? Because the exact opposite was happening over here, right? It was literally trending down. And then when this broke out, this collapsed, right? So I trade SPX, U, and TQQ like inversely. I just trade them up and down. Like I just when one sets up, I sell, buy, right? And then when this one gets high, sell, buy, right? Because they're moving inversely, right? When this comes down, this goes up. And inversely, I caught this trade that y'all see in the profits channel, right? I caught this trade. Why? Because I saw it coming down to this previous level. Right, I'm gonna put this on the weekly. No, I think the weekly looks pretty choppy, but I saw this level right here and I was like, dang, it could get some support, but I'm gonna be patient. So I set this red one to give me an alert, right? All these alert me to tell me, hey, it's dropping to your line. Then I come in here and check the indicators, right? Well, the RSI could fall some more. The stochastic was falling. So I was like, give it some time, but set some other levels, right? Because I know this is support, but it may collapse there. So I set these sort of yellow and a green because the green was go for me, y'all, right? Because I was like, boom, this was resistance on this candle. So I noticed this was resistance here, and these are daily candles. So if the day stopped there, that is strong. So I was like, boom. If we fall back to that day's resistance, I know I'm certain that if we didn't get it here and we didn't get it here, I bet my bottom dollar, do you hear me, that we're going to get it here. Okay. And sure, because I was like, this is running to resistance, right? So if we look at the inverse of the S&P 500, I said that this is as far as this thing can go in terms of realistically, right? Because I saw it here, and then recently it did it here again. So I said, worst case scenario, if we get to green here, and this is at its max, all gas, no brakes here, releasing the valves here, parachute now, right? But you notice this blue trend line. These are things from the past. So if we look at the weekly be a little nasty on these things, but let me open it up in a bigger view right here. I'm sorry if I'm going on, but man, y'all got me in y'all want to learn some stuff. I'm going to show y'all how to trade and make money. I'm going to show you my setup, right? So I went on the weekly and I charted this little trend because boom, it hit it, boom, it hit it, boom, it hit it, boom, it hit it. So what I'm looking for right now is that if we come back and try to retest this blue, which we're at right now, it could get support there, which is not good for the market. Okay. So what I'm paying attention to now, I just caught this bullish, technically it's a bullish run for the market because this collapsed. But what it fell back to is a trend line that it has been respecting. Okay. Now, when it fell below this trend line, it used it as rejection, but then it used this for support here. Right. And now it's back here again. So you want to pay attention to what's going on in the market. But the way I do these things and how I'm successful is that I wait for high probability trade setups just like that. Because if I can trade the inverse to things, right? If you trade the NASDAQ, you can do the same thing, right? You can say SQQ. You can do the same thing here, right? So when we back this out, we'll put this on a day as well. You can see here that actually, let me do this with the cheat code algo. That way y'all can actually see how the indicators help you here as well. So we'll put the QQQ on the left. We'll put the SQQ on the right. So you can see here, QQQ on the left. Whoa, what just happened? Let's go to a daily. And then we'll go, and I can close this bottom part. And then we're going to put this on the daily as well. Cool, we got it on the daily. Now you can see here, market's running up to a resistance here. We got rejection, but then broke out. Now used it as support, reclaimed it here, right? But what I saw here was that we had a lot of consolidation around this area and this range, how it just pops up in here. So I want to pay attention to this base that it had here because it was rejection here and then also some support before we collapse. So this line is crucial to what's going on now. It literally used it and rallied back to reclaim this area. Now, if you look to the right, you can see that the exact opposite was happening, right? It literally, this bearish ETF went up and the market went down, right? And then caution candle here, market reversed, right? So if you're a trader, you need to pay attention to these things because they'll just make you a little more fluent and more profitable. If you're an investor, you need to be looking at long-term on these things, right? Like if you look at a daily chart or even past, right, you see that the bearish ETFs get support down here, right? So how can you be bullish in the long run if your inverse is finding support, right? So that's why I said, like, if you want to be bullish, you want to be bullish up here or down here in the market, right? Because when the market was down, that's when you want to be bullish because its inverses are high, right? Because a lot of y'all are unsuccessful because y'all just out here on FOMO listening to somebody talk about fundamentals and technicals on Instagram telling y'all to buy before it's too late. But I digress. You know, I'm not here to, really, throwing on, whatever. We can look at the charts. Y'all got some questions? I'm gonna get back to the questions. Excuse me, y'all. You use VWAP? I do. I use VWAP. If you put on the 5-minute, I don't trade SQQ and QQQ, but if you put, let's see, SPX, VWAP isn't on XPX actually because it doesn't have volume showing. So you can do SPY, right? And then the white line is my VWAP, right? And so if you're not familiar with VWAP, we'll do a whole video on indicators, but I'm glad you asked this question because we can use this to actually learn new things. So VWAP is one of the top indicators used by traders. It's the volume weighted average price. Okay. So essentially what this does is that it kind of gives support to the price, right? So if the VWAP, if the price is above VWAP, then that is supporting the price, right? Now, if your price moves below VWAP, like in the case of the inverse here, we can see the inverse happen to it. Right, so you can see here side by side what the VWAP does in the charts. Okay, so the VWAP was resistance pushing this price down. The VWAP was support pushing this price up. Now remember that the price can still fall to the VWAP and fall through it, right? So the VWAP isn't just saying that you're good, G. You want to make sure that it's an additional indicator to what you're doing, right? So I definitely use the VWAP. You can see this white line is on all of these charts. I use the VWAP. If you're a trader, definitely use the VWAP. Let's see here what other questions we got. Can you repeat that? El Rey, ¿cómo estás? ¿Cómo estás, Iván? What's up, bro? Mi hermano, ¿cómo estás? SPX on Thinkorswim. SPX on Thinkorswim. Maybe you can buy shares there on the NASDAQ or the SPX. Okay, so how to set limits with options. That's pretty easy. So you can go to your brokerage, right? I want to trade, let's say XPX. You know, you come here, go over to options, and you just click on one of these, right? Hold on. It's going to do it over here. So when you click on here, this is your put or your option. This isn't I'm just clicking on a price real quick so I can show y'all. But when you come in here, you can set a limit order, right? And the limit order is allowing you, like, let me give y'all an example, right? So let's use March 17th expiration, right? Let's say I'm looking at this chart, the daily. Let me look at the chart so I can at least give you a legit answer. Now, my chart is a little messy. I do not recommend this. The only reason why there's so many lines is because I was trading. And so when I was trading, I was watching how they were interacting with these lines right here. So that's the only reason why I got so many lines, because I was trading. Normally, would not have this many lines, so excuse me. Let's go to the SPY because I don't have a lot of lines there. Or QQQ. I don't even trade QQQ. So we'll go here. Oh, QQQ. You're like, oh man, QQQ is at support, right? I can see a lot of demand out of here. We could definitely use this range to bounce up, but you're bullish. However, or let's say worst case scenario, you're actually bearish, because I want to show you all what it's like to be an uneducated idiot, for lack of a better term. Let's say you're just like, nah, we in a bear market and it's going to be bearish from here on out, right? And you're like, oh man, I can see this is resistance. It got rejected here. It's going to go back down, right? Well, one, you're not looking at these other indicators that are clearly telling you that this trend has support, right? And we came down a few days. That's enough to give bears some money so y'all can just sit back, enjoy your pina coladas, and let this fucking doing its thing, right? But let's say you're bearish and you want to do a trade against this. Let's say you're bearish and you want to go on a March 17th. I'm only selecting March 17th because it's the closest date, but I usually recommend getting 30 days out and focusing on what are you looking for. You want to look at the volume and the open interest. So I'm actually going to pick like a real contract that I would trade, but not one that I'm saying you should trade. This is me being an idiot, but a safe idiot. Okay, so I want to be bearish on the QQQ. Okay, so this is the put side. Okay, so I'm going to come in here and say, hey, QQQ, I want to take you to the short side. So like I said, you want to look at open interest. This has high open interest, nice volume. Okay, but I usually try to go for round numbers too, like a 5 or a 0 or something like that, because those are, you know, have a lot more interest, like the 290. Look at this, 93. You'll see that the 85 will probably have high interest. The 80 will be the same, right? That's why y'all want to, yeah, I told y'all, man, it's not rocket science. Y'all be out here like, I'm about a 284 contract, and it's got 737 volume in it. Good luck trying to sell that. Worst case, you know, try to get into something like this. You be like, man, how about the 276 put? And it's got 213 volume in it when you could have got the 275, right? But I digress, right? But I'm an impatient bear right now, but I want to be safe, right? So I'm looking at the 295. I want to stay in the money as well, or closer to at the money. So I'm gonna go for the 285. Now, when I open this chart up on my phone, it's going to show me some key statistics about it. Like the desktop doesn't, but it may. No, it doesn't. But the wait. Maybe it does. 351. Okay, here it is. It's not telling you too much, but on your phone, it's going to tell you a lot more, like the low of the day, and then you can actually see a chart. So like it's going to mirror the chart too. Well, the put would be the inverse. So the put would look like the SQQ essentially. But imagine that if price is going up, my put is going down in value. So this put may have dropped from $4 premium to now $350 because of this run, or more possibly, right? It may have started the day at 500 and it lost that $1.50 in premium, $150 drop, right? But now I'm like, man, coming into Monday, I know we're going to reject. I think I'm so bearish on Monday, man. I just can't wait to short this stuff, man. We're at resistance, and I think it's going to reject from this level here because it's done it. So I think we're going to reject here. Cool. So what I want to do, if this were my strategy, if you think it's going to reject now, right? If you open the market up and you think it's going to reject now, I don't think it's going to do any sort of try to hit a high and then reject. You can say, cool, I want this contract at 350 or 325 or $3, right? You can set that limit order so that you don't have to take that 25 or that $50 loss, right? Because you were expecting it to retrace higher before going lower, right? So if you expect it to maybe hit these limits, right, then you may want to set a stop loss, like a stop loss around $3, because you realize if it breaks a certain point, you got to look at the chart for the option though. Find out what the price was doing on the option premium in correlation to the price. Because if the price was lower when this went higher, then look what that price was for the option when the QQQ was high. Find out what the low was on the premium for this put, because you could put an order in there so that if we go back up to 313, you could get that premium at such a dirt cheap low price and be patient, right? I'm not saying that's a strategy you need to take. I'm just saying that that's the idea you need to have when you're purchasing these contracts, because they're extremely volatile. Look at this, 57%, 47%. Let's see what kind of losses folks took on this contract if you swung it, right? I mean, look at this, 50%, right? And these contracts, losing 45 to 50% on, $200, $300, $400, $500. Some of these contracts are higher when you look at Teslas, and y'all taking 50% losses on your contracts. What I'm telling you is to stop, because if you realize it is this volatile, what are you rushing for? It's either going to be in your favor or not, right? I would rather it come down to me and I'm in this trade than me take it too soon and stop me out on a loss, right? Or let's say that my limit order never even got hit. Who cares? I didn't lose any money, right? So your psychology has got to be different when you're trading options. It's a different beast, but that'll be another live that we'll do. I don't want to make this one too long and go too deep into some other stuff. I want to keep this super basic and simple. So can you give examples of strategy types? Went over plenty in this video. VWAP is fire. Can you show us how to string trade the 200 EMA close? I don't use EMAs. You got to find out what works best for you and your ticker. I can't give you a strategy that works across all, because it doesn't work like that. But for people that are curious about what the 200 EMA is, I specifically try to focus more on SMAs, which are simple moving averages, because they're used by more traders. And if you want to learn more about this stuff, go over to our live streams. And literally there's one on trade alerts. There's one on the dollar, taking down currencies and how it affects commodities and everything, when to be bearish and bullish, supports and resistances. When it comes to options, I'll do more on that to educate you all, but how interest rates and inflation affect the market, volatility index, trading patterns, how to look for trades. This one's hot. Okay. This one's hot right now. So you definitely want to check that out. We got a lot of information and sauce there for you, and it's on Cheat Code TV. Okay. This is totally free. And if you want to join Cheat Code, just go to shop.cheatcode.com, click this link, you'll get access. But like I said, we got a live community. We have also the trading games and trading flashcards, literally everything you need, one-stop shop. So if you got any questions, let's see, make sure I don't miss anything, or the SMA 200. Yeah, on the SMA. Yes, about the SMA now. So Moving averages, how to use the moving averages right here. Boom. This video is for you right here. I break it down. All right. So how to use the 20, the 50, and the 200 and the rules behind that when it comes to the crossovers. You want to use those for additional signals when it comes to trading as well as investing, because if you see crossovers on a long term, you want to pay attention to that. But I break down what to look out for, how to use them, how to set them up, everything. I'm a newbie. Should I start with charting to get my trades together? Most definitely start with charting. You can come here with Trading View. They have a trading panel right here. Paper trading is available. So I don't paper trade on here. I use Webull if I want to paper trade. I don't know how to paper. Oh, it's in here. So you just, I got a count of 100,000, y'all. But it's cool with, if you trade options, you may not see the value in paper trading, but it is so crucial to everybody's success, because what you need to do is watch that to get your emotions right. I wasn't successful until I started paper trading, so I could see how the volatility in options moved, so I didn't have fear when contracts moved against me. I had more confidence that, well, I set up a great trade. I had a great plan. And if in this case, what happens is, let's say you want to be bullish, right? I'm going to give you a perfect example. Let's say you want to be bullish on the market, right? The market's dropping, fear. And you're like, man, I really think it's going to reverse from here, right? Well, what's going to happen is the stop losses are going to get you hit right here. That's why I say stop using stop losses, because if you are in a trade that you aren't confident enough to buy lower when it goes lower, then why are you in it? Right? You don't want to, like I said, these stop losses can add up, and they can become compounding losses that can add up over time. So if you realize that this is an area of demand, right, then you should feel comfortable in this area. So the lower that the market moves, the more I want this price, right? I'm not fearful down here. I'm actually hungry, right? And then, like I said, if you add on the layer of actually watching these market inverses, right? Oops, I got the wrong thing, DXY. So you can say that, oh man, when the market is at support, this is at resistance, right? Or even worse, in this case, when we were looking back at this price, when we were at this price, the dollar had nowhere else to go, right? It had nowhere else to go. So you know that if the dollar can come down, man, I think the market could come up. And sure enough, boom, it rallied higher as the dollar moved lower, right? But there's always that time, boy, that some of y'all ain't taking profits, man, and then pop, right? And so, like I said, every 3 months, these little cycles are going to happen. So you can see here, I'll back this. Let me make this larger to show you kind of how seasonally it kind of works. So we'll go with weeks so that you can kind of see. So just even in, so we started the month here, January is right here, right? January. All right, we got March, and then it reversed, right? Came lower. And like I said, May and June gets rough again. Boom, gave us some hope. Here comes August. Boom, reverse, right? September. So like I said, every little 3 months, you got another little dip, right? So every 3 months, we're going to get these types of seasonal patterns. And right now, if you look at, even if you look at the VIX, right? If you look at what the VIX did, last time we were at this level. This is going to be the last thing I'm gonna do. I'm gonna get off because I got plenty of videos going over this. But last time we were at the support level was right before August of 2020, or right before September of 2022. In August, you can see the VIX caught support here, gave us some false hope for the first week of September, and was like, hey, we good, bull regularly for the year. So when this goes down, the market's going up. So this gave us the false hope we wanted, right? And then boom, the VIX was like, nah, G, I'm at support. Goodbye, resistance, right? So it's the same thing here. Support, consolidation, boom, spike up, kind of reclaim the support. So the lower the VIX goes, the shorter the long term gets for bulls, right? Bulls have better chances here. This is all bears territory, right? Bears can make a lot of money. Last year, we made a lot of money. This year, we can make some more money. You just got to be patient on the right setups, because this is going to go up and down. I feel like we're going to get a lot of sideways action because we're on the war on inflation. So it's going to be good news against bad, right? So we're going to get a lot of ups and downs. And really, this year, you all are going to need to learn how to make money on the downside, or become a trader and learn how to protect yourself, or at least buy. If you're a long-term investor and you don't think you're a trader or you don't feel like that's for you, then you at least need to be patiently waiting for opportunities when market inverses are at their highs, not at their lows, my G. Okay, so don't listen to the folks on Instagram telling y'all, don't wait too late. The time is now. It starts with you. Well, it starts with you, but just not now, my G. Be patient. Let this chart set it up. Okay. How do you say, why do you use edge? Why don't you use? I do use SQQ. Yeah, I use it. I don't trade it. I don't invest in it. I don't trade it. I just watch it. I use it. So if you want to talk about a watch list, I recommend you all use inverse ETFs, gold, the dollar, all these things, the VIX. These will support you on whether you need to be bullish or bearish, which is right here. All right, folks, that's it, man. It's been an hour. I love y'all. I'm so glad y'all came here. I appreciate y'all coming. We don't have any. Why do you trade SPXU instead of SQQQ? And I will answer that question because that is a great question before I leave. All right, this is some sauce. Thank y'all for staying around, and because you did, I'm going to give you some sauce. All right, because I want to show my guy what my psychology is behind this as well. So SQQQ. Now he wants to know. This is the S&P inverse. This is the NASDAQ inverse. He wants to know, why do I choose to trade this over this, right? It all boils down to price, folks. Look at the price here, look at the price here, right? I trade shares in these things. I'm not trading options. I'm not, I don't have to worry about time decay if I'm finding a position down here. If I say that, the SP, the bearish ETF can get support down here because I've seen it before, I don't have to worry about how long it's going to take for that to happen. I know that the market is at a high. This is at support. It's only a matter of time. I just need to be patient, right? I mean, even here, right, I entered and then it dropped lower to my next line and I went heavy, right? And then it did a whole bunch of this, gave me some hope, then took it away, gave me some hope, then took it away, and then broke out, right? But the whole time, I ain't got to worry about theta. I ain't got to worry about contract decay. And like I said, I trade shares in this. So when you're trading options, maybe this is better than this. I don't know, because I don't trade options in these. I trade shares. So when you talk about the price here, if I want to buy 100 shares of this, it's only $1,400, right? If I want to buy 100 shares in this, it's $3,800, right? So if they're both triple leveraged, right? So they're both going to get me about the same value and percentage gain. Actually, a little different because this is a smaller dollar amount, but that's what makes it better, right? Because this I have to spend $3,000 on to even pay to play, right? And I need this to move $1 just to make $100, right? Because 100 shares cost me $3,800, and if this moves $1, right? So if it goes from $39 to $40, I just risked nearly $4,000 to make $100 on a dollar move. Okay. Now, if we take the same thing over here, let's say 15 is the level that we're watching, right? And I buy 100 shares, it only costs me $1,500, right? And if it moves $1, I only spent $1,500 to make $100, right? And every dollar it makes, I make another 100 for every 100 shares that I own. So if I go buy 1,000 of these shares, which is $14,000. If it moves $1, I make $1,000. Okay. It's simple math. Okay. So when I buy down here at 13, I put 13 G's in here. I can make a quick 2. Real easy. I can do that over and over and over again. I just need patience. Right. That's how I do this, y'all. That's how I make money. I just gave y'all the sauce. That's the sauce. That's it. I ain't got no more drip. I just gave it to you. All right. So I'm going to get out of here. I love y'all. I appreciate y'all coming here. No more questions. If you got any questions, please stream these videos. I can't give it to you all here. And it's been an hour. That's a lot of sauce. I can't, have folks around here too long. But I appreciate y'all. If you want to learn more, like I said, join our community. We also have the Trade Hero alerts. That's the text alerts that you can get on shop.cheatcode.com. Okay. Click this alerts here, or you can click Trade Hero here. All right. I will see you all for the next one. We're going to do a lot more of this. Actually, DC, stay soon, because we got an in-person class coming for you. And we're going to do in-person classes a lot more as well, because we actually have this one. Let's see, teachweek.cheatcode.com, y'all. Hey, we got a cruise coming up on the 15th through the 18th of May. Okay. So if y'all want to join us on this cruise, man, y'all, you got the link right here. Pull up. If you want the link, follow us on cheat code, drop us a comment, and I'll send you the link. Okay. So plus show us some love on the posts and stuff. Instagram be kind of shutting us down a little bit. So make sure you share the knowledge, pass on the information. And that's it, folks. That's all we got. I'm gonna drop off. All right. It's been fun. It's been a pleasure. I appreciate y'all coming, and stay tuned for the next one. Click that like button before you leave, and make sure you subscribe to stay tuned for the next one on Cheat Code TV, because we will be back. All right. We're coming to Florida. We hear you. Florida, we on the way. New York City, Houston, Los Angeles, San Francisco, the Bahamas, Mexico. Hey, my boy Yvonne, we coming for you. Let's go. Vamonos. All right. I'll see y'all for the next one. Holla. It's been fun.